Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 14th, 2021. What I'm going to do in this video is cover some long side trade ideas. It's not an all-inclusive list, but just some of the individual stocks I'm watching. I'm going to start the video out with the overview of the market because it's important to know where we're at in the cycle. All ships tend to rise on a rising tide and then fall on an outgoing tide. So right now the tide is rising, so you have to keep that in mind. And so a lot of these trades will be either pullbacks to support, sometimes divergent lows. So some of them are bottoming trades, and some are continuation trades. And whether they pan out or not, and the majority, not all of them, because what I like to do with the individual stock is find some niche sectors that don't necessarily have a high correlation with the market. So, when I say all ships are lift on a rising tide, I'm not speaking literally, just generally, and particularly those stocks that are heavily indexed. So just keep that in mind as I go through some of these sort of niche companies and niche industries, or maybe those that don't have any exposure to the major indexes. They can march to their own drumbeat at times. All right, let's dive into the charts and take a just quick overview of the market. So nothing in recent weeks or really months has changed on the S&P 500. It made a new high. That's technically somewhat significant, but not too much. The trend has been very much intact. The uptrend line that I've been covering for many months now is this one here. It was broken, back tested, and with the S&P continuing to just wedge higher with this the divergences that were in place at that high. And we did have a correction there, but it wasn't much of one. Those divergences have only grown larger. This is what it looks like on the daily chart. Let me just jump over the weekly chart and show you something. Here's what we look like on the weekly chart. This is going back decades here, and you can see the previous bear markets and bull markets. There was a 51% bear market, roughly. That's the little squiggle sign, is approximately 57% bear market back in '07 to '09, and then corrections along the way, all of which were noted. Those corrections are measured off the divergent highs. That's what we're looking at here. So that's a signature of usually a major trend change. Is not a guarantee, but quite often when you see these divergences build on the weekly chart, you're looking at either trend changes, whether it's a correction or a primary trend change, such as a bear market, and that's it. So when you zoom in real tight here, we had that 21% drop. Fourth quarter 2018 also telegraphed in advance with a negative divergent high. And then, of course, the sell signals are not divergences. Those can continue to build, just like I showed you on the S&P daily chart. So don't mistake bearish divergences or divergences indicating a trend reversal as a sell signal, just conditions that exist in the market. And then your sell signals will typically come, not always, but usually on a break of a trend line or a horizontal support level, or maybe a bearish reversal candlestick pattern, something else like that. There was the big drop into the COVID lows, well telegraphed, a very well-defined trend line break right there. Divergence that had continued to build. It's right there is your divergence line. It's not shown up top, but it's down here. And boom, so 36% drop. So here's what's going on. If you notice this, in recent years, all the way going back here, the magnitude of these corrections have become larger and larger. I think that is, in my opinion, largely a function of the Fed continuing to pump excess liquidity and artificially low interest rates into the market, and creating bigger rallies and bigger corrections. So just keep that in mind. Again, I'm just trying to paint the big picture here for these divergences now, which we still have. Here's your most recent divergence on the PPO right here, and then the RSI, and then we had a breakdown and a back test. So we are in an uptrend, but the case can be made that the S&P 500, as I showed you a minute ago on the daily chart, has already broken down and is simply back testing now for the last couple months that primary trend line right there. Again, this is a weekly chart. And then the daily chart, I've added, since that trend line that I had here for months, I've added this, what I call BOD trend line, benefit of the doubt, because now we have two additional reactions. That makes it a valid trend line with three reactions. One off the lows back in March of last year, when the pandemic first took hold of the markets, and now two recent reactions. So it's not a scale 1 to 10. It's not a 10 because in my book it takes a minimum of 3 reactions to validate a trend line, because any 2 points could be connected at random, but a level to watch nonetheless. And then finally, I know this is supposed to be trade ideas, but I don't have too many, so that's why I'm doing an overview of the market, kind of where we're at. Let's turn off all the lines. This is that weekly chart I just showed you here. Let's turn off all the lines. And what this looks like so far, this ramp up here is, especially with the market being at new highs. You know, back here you had a comparable ramp, but it was after that 55+% drop bear market. That's when you usually have the most powerful rallies in the first stage, the first leg up in a new bull market, because everything is so darn oversold, sentiment is so darn bearish. When you see something like that at the top of a bull market, or after an extended, you know, I count the drop into the March lows and those other ones that were, you know, just over 20% or anything there, as simply a correction. And you might say, well, Randy, bear markets, a drop of 20% or more. That's the old school definition from back in the 20s and 30s and 50s. You know, in this day and age, you know, the one term I've given this market for years now is supersized. The Fed supersized the rallies, they supersized the corrections. Everything is on a much larger, the magnitudes of all these corrections and rallies are much larger now. So again, just take your eyeball and look at a trend and say, okay, well, here's a bull market. There's a bear market, there's a bull market, there's a bear market, and there's a bull market. That is a correction. You know, again, I'm looking at it that way, and especially the fact how quick it happened. You know, most bear markets take at least a year and a half or so, sometimes more. And again, this one was just, that was a correction about a month there, a little 5-6 weeks, whatever it was. Okay, so you see where we're at, and now where I wanted to go with that, there's a point. This sharp move, again, the only time I've ever seen anything like it on the S&P 500 is right after, on the initial leg up after a bear market that I'm showing you there. This was a deer market consolidation, sideways action in the mid 90s before we really started taking off there. So nothing looks like that. These previous tops don't even look like that in the S&P 500. But what they do look a lot like, and it reminds me of, is the NASDAQ composite. COMPQ. And the NASDAQ composite, for those of you that remember, if you were around or you probably heard about it, we had the dot-com bubble back then, where valuations were just thrown out the door, and you know, people thought the market would go forever. It was a new era, new paradigm, just like this, you know, super easy Fed that we're dealing with. And that is what you call a blow off top, especially this final ascent like that right there is very, very comparable. And you can see it here in the NASDAQ composite once again. This is what the S&P 500 looks like right now. And just remember, it's any stock that have traded, just about any. When you start to see stocks go parabolic and extremely overbought and everyone's bullish, that's usually when you get the sharpest corrections. You know, rounded out tops will typically have more traditional corrections, and it's these near parabolic runs that usually end pretty swift. So that's it. Here, it's a game of musical chairs. When the music's playing, that's fine. You can be long, be in stocks, and that's, we're going to look at some trade ideas right now on that. Just wanted to point out where we're at with all that. And 8 minutes in, yeah, I'm going to start with the volatility indexes, because they also are telling us, you know, they can tell us some clues about the market, but they're also trade ideas. You can't trade the indexes directly. I'm going to cover a few here, and that is not one of them. That's just an ETN. Remember, if you're looking at the VIX is the most commonly quoted referenced volatility index. That's a CBOE, market volatility index. And you can't buy the VIX, but you can buy futures on the VIX, options on those futures, or ETNs that then track the futures. And you have short-term, mid-term, and all the different ones like VXX, VXM, or whatever I just typed in a second ago. All right, so what we're looking at here, this chart's a little bit busy, but we do have some support here. Let me see. I'll flip over to a different board in a second. We had pretty big support here, and I figured that would hold, and it didn't. And then, of course, I said if it didn't, you know, support until it's broken. It looked like it. We had a little false breakdown. It looked like the VIX could pop there, and it just didn't. It never took off. It didn't take out any trend lines. And what happened, we've fallen now to the next support level, and I have a lines about at $16 or so. Let me see if I have another board here. No, we'll work off this one. and you can see it better on the weekly chart. Let me turn these lines back on. There it is. Okay, here's a weekly chart of the VIX, and you can see over time the VIX has different bases. This was the base or the support zone or support here in the VIX back then. Then we established a new base or support level here that lasted all those years, then back down to the bottom, and again it's a support zone, and that's been support, long-term support, but for a while support was at a much higher level. And here in the middle, if you look in really close, I'll tell you why this $16 level here, you can see quite a few reactions. It was capped here, support, resistance, resistance, support, as I look back in time. So this is mild support. This is strong support down here around that 1150 down to about 10ish area. So we are at support on the VIX, and when I go back here again, that's more of a support zone there, and we still have the same divergence that was in place back here a few weeks ago when I pointed out. That's just now larger because we're still making higher highs in the indicators with lower lows in the VIX. So again, this VIX isn't going to do this without the market correcting. The VIX is either going to continue to fall down to this big support zone here, and that would coincide with a pretty good leg up in the market from where we're at now, and that's certainly a possibility. But if we start to break down, remember just recently I gave you some levels on the 60-minute chart of the futures and SPY. Those levels need to be taken out to get a correction. So if we get those, then we're probably going to get a rally back in the VIX, and just want to point that out. Now that's just the VIX. We also have VXN, which is the NASDAQ volatility index, and you can see same story here. It took out, it was holding this 25, 55-ish support like a champ until just recently. And that's no coincidence. This leg down in the VXN, the VIX volatility index, or NASDAQ, I'm sorry, the NASDAQ volatility index coincided with that breakout. Remember, I've been highlighting on QQQ, that recent trading range that we had on QQQ, and then the Qs broke out and all the FANG stocks broke out. That's that. So that's how technical analysis works, and that's why I say there is, either predictive or at least concurrent value in the VIX, and concurrent, aligning these levels. And when you break out above to the upside in the NASDAQ 100, and this breaks down, well, there, that helps to solidify that near-term buy signal we got back here a couple weeks ago. However, and that's the however, my suspicions are we'll make a marginal new high on the NASDAQ 100, and that is pretty decent support on VXN. So the VIX is coming up on support with bullish divergence. And so again, takeaway could be some short trade ideas, which I'll cover in the next video. And let me just give you a couple others. We have the Apple VIX, which is, hold on, let me grab that. There it is, VXAPL. And you can see on this one, we have a pretty well-defined downtrend line and a support line right there, which is also what's really my divergence line. So this is showing the Apple VIX. It's not at solid support. There is minor support around this level here, roughly where we came in at. But again, there's a trend line there. So if we get it, when we get the next correction in Apple, watch this, and if this breaks out, that could mean there's going to be much more downside. Instead of just a pullback, a buyable dip in Apple, it might be the early stages of a much bigger top. So I just want to point that out. That's a nice pattern I'm tracking. And again, absolutely no buy signals on the Apple VIX. I don't think you can trade that directly, but of course you can short Apple. That's the takeaway from that. And there are no sell signals on Apple. In fact, it's been one of the better looking stocks recently since those FANGs broke out and Apple took back, broke above resistance. All right, that's about it. We have the small caps, and this is interesting. RVXX. RVX is the Russell 2000 volatility index, so for the small cap stocks. And same thing, you want to look for these divergent lows, trend lines. You can often add a trend line there. There was a breakout back test, and boom, and that coincided with a big correction in the NASDAQ one, or the Russell 2000, excuse me. And you also want to look for these divergent highs. You can see right there, negative divergence. And that means, boom, rally in the small caps with the volatility index dropping. Right here, 2736. has been most recently, especially bang up support. It was resistance back here, and then support, 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 support. We're just dipping below it, but not by a large margin yet. So this is it. We're either going to break that, and if we break it, there's really not good support until about down here, about 2050 or so, and that could coincide with a rally in the small caps. But as I like to say, support is support until less broken. So keep in mind that there is appears to be some divergence right there, and we could rally. So that's it. We're kind of at that inflection point, or not inflection, potential inflection point. The markets are either going to power on through these divergences that I've been talking about on the S&P 500, Nasdaq 100, or they're going to turn around and have a correction here. And let me see if there's any other indexes I want to cover. Yeah, crude oil too. You know, no mere coincidence. This has just been great support on the crude oil index, OVX, about crude oil volatility index, excuse me, about 3090 or so. And crude continues to dance on that level. We had divergence there, and we still have divergence building. And so this would indicate a correction or a drop in crude oil. And you know, if we break 3087 there, drop down to the next support at 2383 or so, and that would coincide with a breakout in crude. So let's start there, I guess. That's enough of the volatility indexes. Let's talk about crude. Crude was mentioned recently to watch its downtrend line. A break above that would be bullish, and we got it. Breakout back test. I mentioned objective entry there, and it's been a nice run so far. Roughly, put that line there. A little less than 8% because that line's at 8 if that 63.76 target was hit. Remember, that was a support back here, pretty decent support, and that's a natural target. So if you took crude long recently on or after the breakout, or when T3 was hit here with its divergent low or anywhere there, that is a potential target and a place I think we'll probably get a reaction or reversal, pull back to at least 62.10. So it's more, okay, I'm going to go through these. Most of these are going to be long setups. This is more of a follow-up to a recent long trade and showing you that we're coming up on resistance, and it could even be a pullback short trade. I'll have to study the charts a little further and make a case. You know, every resistance level I don't always look to short or get out of a long. Like in the sugar trade I covered this morning, that one hit resistance. Here, I'll show you. And that was my preferred swing target. And so, you know, as I said in the comments below, I took profits on it. We're still there, but there's a reaction so far. We ran up that last leg up to hit my 1590 target, and we've stalled out there so far today. Now in this one, like I said in the notes on the comment section to somebody, I took profits because of the divergence and because that was my preferred target. And sometimes I'll just let it run, and sugar may very well do this, power on through there. Sometimes I'll just tighten stops, and that way I either lock in gains or most of them if we go back down, but stay in the trade if we're going to do this. And like I said, I'm leaning towards the pullback there, and then that's going to set up this. Here, I'm going to clear this out, and covering this because again, it's a trade idea, whether long or short. It's been a long trade idea, and still mostly is. But there's a little minor trend line. So what I'm thinking we're going to get here is a pullback, come back, hit the uptrend line, and/or just below that, roughly. You know, and that line should actually be moved up just a hair, but I had the first target at 1558, but you can see a reaction high there around 1562. So they come in together, close enough. And so these are my thoughts on sugar. Pull back there, recycle back in, maybe another thrust up in the wedge. And we could very well break down. I mentioned that in the last update as a short, you know, stop set just below there if you're holding out for the bigger gains. Because remember, my whole theme for a while and still has been the inflation trade, and this could very well be the next leg up in sugar. And if so, then you know, just set your stops appropriately and strategically as well. I like to use strategic stops, meaning placed below support level that the buyer should step in if we get a pullback to, quote unquote, should. And if they don't, then that's where you break down. You're probably going lower. That's a strategic stop. You can also set a flat stop or a trailing stop in percentage terms. You might say, well, okay, you know, I'll give it a 5% trailing stop. And sugar doesn't trade on normal hours like the stock market has its own quirky on and off hours, and it's not as liquid on the futures. That's another reason I took profits there. But still very much open to that scenario. And if we pull back there, I'll load up and I might ride that wave up, just trail stops up if and when I get a re-entry. I have a stop buy order to cycle back in just above there. I think it's at 1562 if I remember right. So, that's a takeaway for a trade idea as well. Okay, trade idea number one, and this ties into China, which I recently, this one trades here in the U.S., but this is Alibaba. And you guys probably saw, if you follow the headlines, financial news, that China took over, or pretty much took over Jack Ma's other company. He's the founder of Alibaba, and also has that financial company, Ant Group. And so there was a lot of, I think that was a lot of the pressure here recently leading the stock down. But let's keep it simple. This is just a pullback to support, and these are, in a bull market, what you're looking for. There's a very well-defined uptrend line, recently pulled back. I mentioned this a couple days ago, and shame on me for not getting this video out sooner, because that one was at the support level, and it was the one I added to my watch list. It's bounced a little bit, about 8%. But again, if usually when you tag the trend line in an uptrend, that's it, and you get the next leg up. So it's still objective. Ideally, if you get another pullback there, great. And then the thing is, I like to buy possible as close to the trend line as possible, because that way you can then again put a strategic stop set just below, maybe on a solid break, big break, or a daily close, or even two red candles down below there, just to avoid little intraday whipsaws or one-day whipsaws. Again, it's up to you. That's the tough part in trading. The wider your stop, the more you're going to give back in profits or take in losses, depending where you entered. But on the flip side, it allows you to stay in the game and not get shaken out and capture some of the bigger trends. And in today's market, it's plagued with stop raids. The algos, as well as human traders, they see these levels, and they know every now and then the conditions are right, volume's low enough, and they have enough capital, they can engineer a stop raid by taking a stock down below there, running the stop, turn around, then buy it themselves, and cover their shorts, and then reverse it long. So that's it. Let's not over complicate it. First target would be up here around 268. Or again, if you're in a bull trend and believe we're in a bull market with a lot more upside to go, then that's it. Just there's your trend line, and you buy it at that with a stop somewhat below. So on a related note, we have mentioned a few weeks back PGJ, and I believe I mentioned it here on this pullback to 60.46. It's pretty good support. Right here is all the resistance, a little uneventful breakout, really more of a whipsaw, but then we came back to this trend line right here, held that support, and then boom, there's your breakout candle, and then boom, ran up, bull flag. And that's a textbook bull flag, by the way. You look up the definition of bull flag, you get a nice impulsive leg up, the flagpole, followed by a pennant or flag shape consolidation, and then boom, an impulsive breakout. Nothing but green sticks, and it pretty much met the measured target on a bull flag. And measured target's the length of the flagpole added to the that would be the length of the flagpole there, added to the bottom of the flag. Okay, so then we corrected, and so this is a correction in what could be an ongoing bull market in China. This is one of the Chinese ETFs, PGJ, and so it's still actionable because there's a breakout, there's a downtrend line right there. I'm sorry, it's a setup. We're just starting to crack, so a little bit more solid close, impulsive move up. And then your two objective buy levels are down, pullbacks to around that 60.46 level, as well as that red line there is the 200-day exponential moving average. Just below it is the 200-day simple moving average. And that's it. So you buy around here, stop somewhat below. Targets, minimum, I think a back test of this trend line, or if you believe this is a start of a or early stage or just middle stage bull market action, and you're looking for the next leg to new highs, just trail up periodically, raise your stops, or set a trailing stop and let it run. Okay, so that kind of meshes with that Baba trade again, because they probably have I'm sure they have a pretty good correlation. Alibaba's one of the biggest Chinese companies. All right, what's next? Let me just see. Some of these might have already moved. Yeah, Grub already moved too much. I had it down here at 55, 51 support. In fact, it's rallied into the first target of resistance, so I'm going to move on there. And some of these, I'm going to loop back to these agricultural input stocks. This is one I was very bullish on a while back here. We put in divergent low, positive divergence, ran on up to hit my first target there and the second target. And I have I did and still have a potential third target up here. Again, I'll do an update here. I wouldn't chase it now at this point. There was our primary trend line. There was nice support at 241 breakout, but this thing's already run, off that divergent low back here, even off the 241 level. I think 309 was either the first target or the next breakout point. Can't remember why I colored that blue, but it's up about 374%. However, it is a trade idea. It's just not actionable yet. If we can get on up here to that 1435 level, big resistance in this stock will be very overbought, and if it happens soon, we could have some negative divergence here on the PPO. Extremely overbought. It will be a great short trade. This thing moves both ways, up and down. So again, right now it's in no man's land, smack between support and resistance, and I'll get to some of these ag input stocks maybe in the next video. Alrighty, UNG. I've mentioned natural gas in and out as more of a swing trade. This one I usually swing trade it. You can hold it and capture the right trend, but it's so volatile and the trends are so powerful. It makes just a great swing trading vehicle, long or short. And so the bigger picture here on UNG, and again, this is the ETN that tracks it. You have a divergent low here. You've been building divergence, and so this low here, particularly on the RSI, was a divergent low. You also had PPO divergence right here, and we've been moving higher, and there's that 922 support level. And again, nat gas was mentioned. My preferred proxy are the futures. You just have a lot more candles. There's things like crude and the markets trading virtually around the clock. So when you go to a chart of the futures, you're going to see a lot more candles, and therefore you can identify trend lines, divergence, things that don't stand out on UNG, which is just an ETN that's it is tracking the futures, but it's only trading between 9:30 p.m. and 4 p.m. at least the regular session trades. And so that's it. So I mentioned this one recently. Back here, we already hit that 2676 target, and I'm highlighting it now because we pulled back right now to that 2616 level right there, and any pullbacks to the trend line will still be an objective entry with stops somewhat below, or you can put a stop below 526, but there may be quite a bit more in the trend based on what I just showed you there on the daily chart of UNG, as well as when I look at the longer term chart of natural gas futures. And again, it's all about the inflation trade. I think more and more people, I've done a recent Google Trends search, and I can see it's spiking up. Google Trends, you can type in any term and it'll show you how active people are searching that particular term. We won't bother here. You can just take my word for it or check it yourself on Google Trends. So that's, and it's, again, I don't care what anybody is searching or says. I've been tracking these commodities for years, and I've pointed out they're all in early stage bull market price at most of them. Natural gas has a little more work to do to say it's in a new bull market, whereas a lot of the ag commodities and some other things, it's clear based on their charts that they're out of bear market territory and new bull markets. So with that in mind, a bit contrary to what I just said, it depends on your trading style. You can just hold it and just keep raising stops and strategically, or a certain percentage. I can just tell you, if you put a 3, 4, 5% trailing stop in natural gas, you might as well just go trade something else, because this is the nature of the beast. Here's an uptrend. I'm just going to measure one of these out, just one of these pullbacks there. That's about a 9% pullback, and this one was bigger, so that's about 10. That one's probably 7 or 8. So in other words, had you run a 5-6% stop loss like a lot of people like to do, you would have never stayed in this trend right here. So the only way to trade it is wide stops, and the key to that is just don't use a very big position size, and you don't need to cut. If you trade typically 50,000 or 5,000, whatever your number is, cut it in half, because if you capture a trend and you can stick with that trend, that was 36% rally in a matter of a month or so there. So that's the nature of this beast. The pullbacks and the corrections are sharper, but so are the rallies. So therefore, you don't have to put as much money into it to make a fair dollar profit. That's where I think people get tied up is, the important thing to me is not percentage terms. I'll take a very volatile, I'll trade a penny stock and I'll put a fraction of what I normally put in, but if I get 200-300%, great. I'm making more in dollar terms than I would have had I put a big chunk of money into Apple when Apple only went up 10 or 15 or 20%. And that's what I coined the term beta adjusted position sizing. That's what I use, and it's often, a big part of deciding how much or how little to put into a trade. All right, next up, let's move on here and get to some more individual stocks because I already covered natural gas recently. I had a DM. DM Desktop Metals. This one hasn't been around too long. You can see it looks like it came public back here in 2019 and kind of went nowhere. I believe this is a 3D printing company. And what I've noted on this one is, again, it was one I've had on my list for a couple days now. Pull back to this 1254 level. You have support there. Not super well defined. I mean, there's more support, big support down here. It's clearly in a downtrend. What happened is it just went crazy. I mean, it had a huge run up. Remember, I use log scaling. It may not look like much, but this thing went from $11 up to about $36. So that's more than a triple. Close to it, about 200, double, more than double. From there it is, 11 to 36. Oh, that's odd. I figured if I grab there, you have more than it's showing a return of 241%. Either way, a nice gain, and then it put in the divergent high, and then you had the trend line break right there. We've come on down and started to put in divergence here. We've been building divergence on the RSI. Near divergence, we have about an equal low in the PPO as well, so there's a potential. It'd be nice if I could draw a clean trend line, but let's see what we have on the 60-minute chart here. That's the best I can do. It does have 3 reactions, and you can either, again, take it at or near support. That line's an old line right there. 50. Yeah, no, it's still valid. There's resistance there at 1558. So that'd be the first target and a breakout point. So there it is. That would be, if it can take out both these levels here, it should run. And so you can either buy it now at support or just off support or another pullback to that recent low, and or add on a breakout above 1560 in the downtrend line. And then let me give you a quick target. Minimum would be these 2 reaction highs, or 3 right there. That's a nice target, 2141. So from where we're at now, that'd be about a 56 or 55% run if we got it on DM. So there's a long side trade idea. Again, objective long entry around 1254. If it comes back there again, it hit there yesterday. Again, this is another one I should have got the video out to you then. My bad. VLDR, and that is Velodyne LiDAR. All right, here we have a downtrend line. We have a divergent low right there, positive divergence. We also have support right around that $11 level there. That's support. That's the second support level, which we've held. You can see, some reactions here, some reactions there, a couple around that point and recently, and so we're kind of wedging here in this descending triangle pattern. So you can either buy it down to around 1230 is objective long. If it happens to break that level again, you can buy it. It's objective to go long around $11 with a stop somewhat below there, and or meaning maybe you buy some here or you buy some there, and or on a breakout of the downtrend line. There's a reaction right there, reaction high, that will probably come into play, but I think if it can rally off that level, you could swing it all the way back up here to about 1729, and from where we're at now, that would be about a gain of 30 or 31% or so. Next up would be ETCG. Well, let me roll into Bitcoin and some others. They're not actionable trade ideas. at this point in time. Somebody asked an update today or requested an update, and Bitcoin futures is my proxy for trading Bitcoin. That's BRR. What you have here is BRR is above trend. It's in a bull market, a bull trend, a lot like the S&P 500. Just because I'm not harping on it to buy it every day, I like to make objective entries. It's in an uptrend, and but it's kind of in no man's land. And like the market, it's in an uptrend that is showing signs that it probably doesn't have a lot more to go before we get a decent correction, because you have some big divergences. This is a daily chart. We're looking at daily candles right here on Bitcoin futures, BRR, and you can see the divergence that's been building. Now, divergences can and will often get extended. Sometimes they get burned through, meaning we go up, and if we take out those previous reaction highs, then you no longer have negative divergence. But as long as you do, that's a setup to watch. If you look right here, about 61,442 is some minor support. So there's your setup, really. That was resistance right here. We just broke out, so it certainly wouldn't short it here. If anything, I'd rather be long than short. But I have no positions in Bitcoin now. I'm just not, again, it's not standing out to me as objective long or short. But if we break that, come back down below that 6140, 442, and the trend line, we're probably going to come back down all the way here to 44, 655. That would be my first target, first decent support. From where we're at now, just to quantify it, if I can grab this line, there we go. That would be about a 30% drop to get there. And then we have, of course, if you don't trade futures, GBTC, I believe, is the first to market ETF type instrument for Bitcoin, and there's a similar trend line right there. So of course, because it's tracking, it's going to have a comparable uptrend line. And so here's this one. You had a divergent high right here, and I gave you back at that time a pullback trade in Bitcoin right there. We had a clean uptrend line. It broke. We came down, hit that bottom of that first target zone right there. And then reversed, hit the target zone again, and we've kind of been going sideways. If we go up a little bit higher, any high, marginal equal or marginal new high anytime soon, it will simply extend the divergence that was in place at the last high. So either way, whether we get that or not, a solid break of this trend line, and of course Bitcoin futures, these ETFs or ETF-like instruments like this, I believe it's a quasi ETF. They do their best to track futures, but this one will trade at a discount or premium. That's what makes it different from an ETF. This is like a closed-end fund, I believe, and closed-end funds can trade at a discount or premium to their net asset value, meaning the value of Bitcoin, depending if there's a lot of buying or selling pressure. And so that's why you want to use a chart of Bitcoin futures if you're going to trade this one and confirm a breakout or a breakdown, because on this chart it could be, there was a whipsaw right there, that little candle, that red one. All right, next up would be Riot is one of the proxies that I will often trade when trading Bitcoin or in lieu of Bitcoin, because it will tend to move with it. And so I would show you this right here as a breakdown. But again, Riot's only going to go down so far without Bitcoin breaking down. Bitcoin's still above trend, as I showed you before, but there's a target. So if you get a sell signal on Bitcoin, or if you think that's going to happen soon, you could take a shot on Riot. I can't make an objective case. Well, maybe it's not the strongest case. We're at that this downtrend line I just showed you here. We're struggling to get through it, or Riot is. If it fails, there's your next support level. And that's, again, also I'm doing this video for longs, bulls that might not want to short. If you can get a pullback to 27. But again, if you get to 27, what does the chart of Bitcoin look like? Did it just break that major long-term trend line? And if so, you're probably going to break 27, whether you get a reaction or not, and come on down to some of these other potential downside targets. Upside, if you're bullish, break above that, and as long as Bitcoin remains above trend, buy the breakout if we get it soon. And there's the I guess competitor, or whatever you want to call it. Ethereum. This is the ETF you'd want to use, or ETN type instrument. Again, same company, I believe, Grayscale. Big support level there, but we're already way past that. There's a downtrend line. We had a little wedge, bullish wedge right there, broke out recently, ran up. So these are my levels that I'm watching, and I don't, I'm not Again, it's not my favorite. It's in no man's land. So, I want to just share this to really give an update for those of you interested. I know a lot of people are into the cryptos, and those are the levels to watch. In other words, big breakout. If it can break above 22, 430, 44 or so, I think that's going to be a significant level, because that's where our two major previous reaction highs are at right there, and there's one right there. So there's a level to watch. However, if it gets there soon and possibly makes a marginal new high, there's a good chance we're going to have this divergence in place. So I can just tell you it was one that I'll probably pass on if it breaks above there, unless it's a solid breakout, we start to break through the divergences and all that. Otherwise, it could be a short trade idea as well. And if you're looking to buy pullbacks, well, here's a nice trend line, or a decent trend line that I can add to it. Somewhere around right here. So there's if you're into this one or looking to get into it there, and if not, this 1109-ish level is pretty good support as well, and also downside targets for a short trade. Another one that's already bounced off support today. Not too much, well, 8.5%, but still, I wanted to point this one out. In fact, I just found it yesterday. It was here at that 214 level. That's a pretty good support level. You can see reaction highs there, one there, little false breakout, and that's what happens if a breakout fails. It's usually pretty impulsive once the bulls and the longs that took it realized the breakout failed. It came back down, tried again for several weeks there. That was actually a couple weeks of trading, failed it. Finally broke out right here. There's a breakout above the level and a perfect back test. Breakout, back test, boom. And so there it was. This one's a pullback to support trade. Minor little trend. Yeah, it's worth it. And there it is. So today's a breakout candle. You could still take it. I would have preferred to gotten it out to you yesterday on 214, but it's still not too far off that level, relative to how far this one can run. Target would be up there. I've had this line forever. And I'm going to move it right now because we've gone a little bit above there. I'm going to round that up to about 3, I think. Traders love round numbers. There it is. And it's also this previous reaction high. So that would be a target, and so it still gives you a favorable risk reward if it gets up there. And again, going back to the beginning of the video, as long as the music's playing, if it's a bull trend overall, it's going to help this one. If the markets break down, it's probably not going to make that 31% run up to the $3 level. But if you took it, that's 30% or so, a little over 30%. And you could put a 10% stop down there around 206. That's a little below there. That'd give you a 3-to-1 risk-reward ratio, even at this point, with the stock up 8.5% on the day, after closing right on that support yesterday. Alrighty, that should be it. Yep. I've got quite a bit of setups in the agriculture input sector. If you recall, I was quite bullish on that one a few months back. First became bullish on the agricultural commodities themselves. And once those started playing out and rallying, I identified the ag input sector as the next to go because it was as a bottoming play, and we've had explosive gains on a lot of those trades. 3, 4, 500% and more. However, a lot of those are coming up to some of these maximum targets, resistance levels. And I even see a few that are pulling back to support. So it's kind of a mixed bag in there, and I'll cover that in the next video with some short trade ideas, which will also, like this one, have a few longs mixed in as well. One that I forgot. I don't know how I skipped over this one. Let me see. Somehow I missed it, and it was one of my favorites. That's funny. Glad I just caught that looking down at my notes. GSHHY. Guangsheng Railway Company. So I would assume that is a Chinese company. Forgive me if it's not, but it's pretty much what it sounds. I have not looked into it, but I just like this chart. I came across this one the other day just looking for trade ideas, scouring over a lot of charts. Just a big primary downtrend line right there. Big divergent low that it put in recently, right there. There's your positive divergence. It's been moving higher since that divergent low, and an uptrend. There's your uptrend, and it's coming up on resistance, or it already has, at about 1055. Let's round that off here. Call that 1055. And above the downtrend line. So you have a breakout above the downtrend line, but this is one of those cases where I talk about my BOD line. This is my benefit of the doubt line. This is the one I want to see it take out. because I have only 3 reactions or so on the downtrend line. Well, and then another one there, so call it 4. There's a breakout candle, but this is big resistance. The way I see this, some traders might be watching the downtrend line. They might have took it, and that's why yesterday's move was pretty impulsive. It's a gap followed by a big green candle. However, other traders might be looking at this horizontal resistance level, and so that's the one that I think it's safe if that goes. So 1055, I think I already have an alert, but let me make sure. And that's it. And you'll notice I don't have a target until 15. Why? Well, that's a thin zone. Thin zone is when you look at the volume at price histogram. I'll turn that up a little so you can see it. It shows you how many trades occurred at a certain price. And so you can see a lot of trading here. And that makes sense because that's resistance. So when you pop that, it's similar to a gap. A gap would have 0 trades in there, so you wouldn't have any bars. But you can see how these bars are relatively small. And then again, a lot of resistance here because there's support. It traded on and above this support level for a while. And so if it can break above that, and it would help obviously if the Chinese markets hold up. If it can break above there, you're looking at a 50% run right there from 1050 to 1530 or so, roughly 50%, and that's that. Okay, that is it for now. I do have some others, and I'm going to continue to work and refine and modify this the trade ideas, and I'm going to work on the short trade ideas next. Get that out to you. A lot of those are setups because the market's still in an uptrend, but I don't want to see the market break and then all of a sudden start going down faster than expected, and then get the short. So I'm going to get the short trade ideas out to you. Some might be actionable. Majority are probably short setups, which are just keep them on your radar. Here's the levels to watch, and if these break, boom, there's your entry point. All right, that's it for today. At least in this video. This has been Randy Finney with Right Side of the Chart. Have a great day.